Hello and welcome to Switzer Investing. I'm Peter Switzer. Thanks for joining me. On tonight's program, I have Michael Wayne of Medallion Financial, looking at the stocks he likes and the ones he's recommending for his clients as a consequence of reporting season. In the past, Michael has been a very good caller of tech companies, introducing me to companies like Ordinate, Megaport and others. So what he's got to say now should be very interesting. And then Paul Rickard and I look at the troubles that CSL is facing. Is it in the buy zone now, or should you be forgetting about CSL? In the past, it's really been a great rebounder whenever it's in trouble, but it is challenged by things like the Ozempic diet drugs, the magic drugs that help people lose weight and therefore reduce the need for kidney treatments and reduces the impact of diabetes. So CSL could be challenged by this magical diet drug called Ozempic and others just like it. And we also look at BHP. Will it go over $50? Rickard has always said that he believes it will. He'll explain why he says that. And then we'll look at Treasury wine estates who could benefit from Beijing being nicer to this wine company with all those tariffs that they imposed a year or so ago. So that's the show. Let's kick off now with Michael Wayne of Medallion Financial. Thanks for joining us, Michael.
Thanks for having me, Peter.
Okay, so you've seen reporting season and part of your job is to find good companies for your clients. Have you prepared a short list of new companies that you like?
Yeah, I mean, it was definitely just to start off with, it was a fairly decent reporting season as far as recent history goes. So that's always optimistic. In terms of new businesses coming to the table, not so much sort of brand new ideas. It's more reinforcing some of the good quality businesses that we already have in the portfolio. We tend to be sort of more long-term buy and hold type investors and maybe make a few adjustments around the edges. But there was definitely some very good results from the likes of Ordinate. AD8 was a very good update. Goodman Group continues to perform very well, despite being in a property sector facing the headwinds and challenges that it is. And PolyNovo, that's potentially more of a newer one for us and many of our clients. That's one that continues to come out with some very good news flow.
Okay, give us the third one again. I just didn't catch it. What?
PolyNovo, PNV is the code.
All right, yeah, and it's for my viewers, explain what it does.
Yeah, so it can be a little bit gory in some sense, but effectively they've come up with a biodegradable mesh, which is used to treat burn victims and those victims suffering from large wounds. And effectively it lays the groundwork so that like a good quality skin graft can be done over the top of that mesh. So effectively it reduces the need for biodegradable animal products, which have historically been used to treat many of these things. So the infection rates are lower, the quality of the end result is higher. They've done a very good job in bringing the product to market, and now it's a matter of really commercializing it even further, particularly in the US, where they've increased the sales team by around 60 staff. They've also got the opportunity in places like India, where there was a very good update just today, as well as the fact that they have other potential uses for this particular procedure, things like hernias and those kind of things, which are now going through the various clinical trials. So this is a business that's growing revenue about 60%. It's at the inflection point where it's now turned profitable, which often is a very good point to be looking at a business.
So Michael, it reminds me of that other company in the sort of the burns and skin space. What is that? Avita, was it?
Avita Medical.
Yeah.
That's a business which is very similar. You're right. That's more of a spray-on type skin.
Yeah.
So slightly different approach to a similar sort of wound, if you like. But they're different products in that they can be used in different stages of the process or slightly different treatments depending on the clinical, how do you put it, diagnosis. So yeah, Avita Medical basically came into its own in post-Bali bombings, whereas Novo spawned out of the CSIRO. But both have decent metrics, but we probably prefer PolyNovo, just given where it is in its business cycle and the fact that it is turning profitable and commercializing quite rapidly.
Okay, so for people who don't know the famous Michael Wayne, you introduced me and my viewers to Megaport many years ago, and it's proved to be a good tech company, and also Audinate. Now the analysts haven't been heavily supportive of Audinate because it did well even when most tech companies got smashed. Do you think, are you seeing another leg up for AD8 as the ticker code goes?
Yeah, it's hard to be overly excited after a run up of this magnitude, and given it is extremely expensive. However, historically, they've had a very large focus on the audio digital space. They've recently moved the business to also encompass the visual digital space, so videos as well as audio. And basically, they hit their targets for the 12 months in the first 6 months of the year. And that was very impressive. And that's what got the market very excited, because effectively, it just opens up an entirely new target market for them and enables another massive revenue stream for them if they can execute. But look, we continue to like the company, despite the fact that it has run up as much as it has. You have to understand this company, in some sense, if it continues on its current trajectory, is effectively an unregulated monopoly. That's how much of the market share it has, and how much it does dominate its nearest competitors. So it's growing at 8 or 9 times the nearest competitors. Basically, 80% of new electronics goods that come to market incorporate the Dante protocol, which is owned and operated by Audinate. So if you think about all the different speaker networks or TVs and all those kind of things, often these new products will incorporate the Dante protocol. So they're well entrenched within the electronics market. And if they continue on their current path, it could really turn out to be something pretty special. Although you do have to be tentative with your weightings. You can't be putting all your eggs in one basket, because if they do have a slip up or two, given the lofty valuations, they will come back pretty quickly.
Yeah, but also, Michael, you made the point many years ago that it's a real rival to Bluetooth, which actually is basically a not-for-profit service or facility. But are you saying that a lot of the electronic stuff that we buy has Bluetooth enabled capacity on it? Are we calling it Bluetooth, but in some cases it could actually be Audinate's Dante product?
Yeah, that's absolutely right. So Bluetooth, as you point out, was basically an old-fashioned, what do they call it, like cooperative kind of setup, so there was many
for academics. I would have thought were behind it.
Yeah, I mean, and it was all a lot of different companies were involved, but no one actually owned it specifically. But the Bluetooth does work. It is effective to some degree. But when you're thinking about large-scale outdoor concert venues, large stadiums, where we saw Vegas Rugby League just last night, that when you're talking at those large-scale type events, then you need something a little bit stronger, more effective. And this is where Audinate's Dante protocol works best, eliminating all the needs for cords and cables in those environments and those spheres. So it's very, very similar concept, and in fact, it probably is superseding Bluetooth in a lot of instances.
Okay, so we've gone for Audinate and PolyNovo. What's the other one you mentioned?
Audinate, PolyNovo. There was Altium, which unfortunately has been taken over, or fortunately if you're an investor, but unfortunately for the broader index. And then Goodman Group and ResMed as well is another one that we thought reported well. An old favorite, but still a goodie in our opinion. Although there is some Eli Lilly trial results coming up in the next month or so that people should be aware of, but nevertheless, the actual company and its results are doing very well.
Right. Okay. So that's you becoming, clearly you're a father now. You're no longer a young tearaway like you were when I first met you, when you did come up with these sensational companies that were well priced and we made lots of money. Come on, you got to give us one interesting one that has potential, but could be a bit of a speculative play.
Yeah,
Come on.
I'm just trying to scour my mind
So
quickly.
you're becoming older and more
More
conservative, which is a good
conservative, yeah,
sign.
to some degree. I've always been pretty old at heart and pretty conservative at heart.
Yeah, I guess that's why
Um,
we got along.
but yeah, that's the potentially. Let me just have
What?
a quick think, just trying to think through the top sort of one that it didn't report so well, but we quite like it long term. A company called ReadyTech, RDY. It's a technology business, or it's got a technology slant. Effectively, it's helping with training, education within a lot of industries such as construction, mining, making sure your staff are all up to standard, or are up to the requirements of the industry. So the company is ReadyTech. They're looking to grow earnings compound over the next, or sorry, revenue compound over the next 3 years of about 15% per annum. It recently had a takeover proposal thrown at the company, which the management rejected. Maybe not so recently now, maybe 12 months or so ago. And that was at a price substantially higher than today. And we have seen a lot of these tech businesses in Australia, you know, receive a lot of interest from overseas parties. So we feel as though ReadyTech, even if it doesn't get acquired, will continue to deliver some very good numbers. And there's also the opportunity and the potential that a business will come in over the top and offer a significant premium to the current value. So yeah, keep an eye on that one. RDY didn't have the best results, so might not have the best, couple of months ahead of it, but in time we expect good things from the company.
Okay, so that's ones that you're looking at and you've got, and ones that think you've got potential. What about Paul and I, Rickard, not myself, talked about CSL. What's your current view on CSL?
Yeah, we continue to like CSL. It's a top 5 holding in our managed fund. It's been a bit frustrating the last couple of years. It's really been in a consolidation phase, but going back through history, it's not uncommon for CSL to have these periods. It does feel like a long time, but in the ultimate scheme of things, it is a business that is still growing revenue by mid double digits at least, earnings around 20%, compounded year after year. And these are very, very strong numbers for a business the size of CSL. Had a little bit of disappointment recently with a failed clinical trial. Well, not a failed clinical trial, but a clinical trial which didn't achieve the results that management and the analysts were hoping for. All the analysts had about a 70% success rate factored into their price, which added on about $20 or so to the share price. That has since had to come out of the share price, and that's the reason for the fall that we've seen. But that's a one-off effect. The core business itself continues to improve, being the blood plasma business. The margins continue to improve as well. So from a long-term standpoint, it's a business we can continue to like and continues to dominate its competitors globally.
Okay. Have you looked at the threat from Ozempic and the implications for kidney disease and the product that CSL has for treating kidney? Have you looked at that and viewed it as possibly being something as an exaggeration in terms of how negative it could be on a company like CSL?
Absolutely. That's obviously was a big factor that was playing out over the course of the last 12 months or so, not only with CSL, but the likes of ResMed. And there's no doubt that these new weight loss drugs will become entrenched within communities. But I think the impacts on some of these companies like CSL and ResMed is exaggerated, very much so. The reality is with Ozempic and the way that it's currently administered, there needs to be injections completed, once or twice a day even, and it needs to be an ongoing thing over the course of someone's life in order to sustain the progress that's been made. So they're quite invasive therapies, and I think, long term, they're not going to have too much an impact on businesses like CSL or ResMed. Uh, that's our view. There's a fair bit of data going around at the moment on some of the broader numbers and looking at the general impact on these companies. And I think looking at some of those figures, it's probably unlikely to have an ongoing huge impact. But I'll have to refresh my memory on some of the finer detail on it.
Yeah. And are you therefore saying that you must think ResMed's probably still in the buy zone then?
Yeah, well, and we still think ResMed's in the buy zone from a long-term standpoint. It's trading on a multiple which is fairly low relative to the last 10, 15, even 20 years or so. It's a business, again, that's growing revenue, earnings and margins quite nicely at the moment. As I mentioned, there is a trial coming out, which is being conducted by Eli Lilly, the very large US company, looking at the impact of one of their drugs on sleep apnea. So depending on the outcome of that result, you might get some short-term volatility one way or the other with ResMed. So if I was looking to increase my position in ResMed, I'll be, reluctant to do it immediately and be more likely and more inclined to wait until the results of that trial come out from Eli Lilly. So that's expected sometime in the next couple of months.
Okay, mate. Thanks for joining us, Michael, and
Thanks for
see you in a
having me.
few months' time.
Yeah, absolutely. Or sooner, hopefully.
Okay, see you, mate.
Bye.
And that was Michael Wayne of Medallion Financial. If you want to see the rest of the show, you're going to have to be a subscriber to the Switzer Report.